So Bitcoin, I do think, replaces gold as the base layer of money. Now, gold will be used for other things, whereas if you can't get to the internet, it's tough to spend your Bitcoin. So I do think physical assets have a role, but Bitcoin becomes the base layer, and therefore every government is going to have to own it. So if you think about it, Bitcoin gold equivalents, total no-brainer, right? Bitcoin is going to replace that monetary value of gold. Now, you're never going to use Bitcoin to make chalices or jewelry or whatever. So that $6 trillion of gold that is in stuff, that's not Bitcoin. But Bitcoin is the monetary value. So that 6 trillion number, that's money in the bank. 300,000 price, that's so easy. Is it tomorrow? No. Is it 2 years from now, 5 years from now? I don't really know, but that's easy, super simple.
Hello and welcome to the Achieving Alpha podcast. My name is Steven and I am the host of the show. Today, I'm delighted to be joined by Mark Yusko. He is the founder of Morgan Creek Digital. And it's really great to have Mark on today after we've been conversing on Twitter for a number of years. And it's really great to actually speak to him in person. So welcome to the podcast, Mark. How are you today?
No, thanks for having me. Excited for the conversation, and it's always great to get up almost live. You know, Zoom isn't quite live, but close enough. Or StreamYard. Yeah, StreamYard.
As close as we can get, we can maybe meet up one day at a conference somewhere in person. Perfect. All right, Mark. Well, really great to have you on today. What I really want to do is, it's been a little while since I've done an episode on Bitcoin. So I want to talk more about where we are in the market right now, what's happening, which key strategic moves are going on at the moment. And before I get started, it's good to say big congratulations to you and to me and to everybody for Bitcoin going over $100,000 is a massive milestone.
Absolutely. No, it is, and it's exciting. And you know, for those of us who've been around for a long time, you know, we knew this was inevitable. I mean, the way Bitcoin is structured, it will just continue to accrete value as the other currencies around the world devalue, because that's what's really happening. I mean, ultimately, the price that we see on a day-to-day basis is just what two people decide to sell a small amount, but the underlying value is created by the network effect, but also by the fact that, you know, one Bitcoin will always be one Bitcoin, right? It's been one Bitcoin for almost 16 years. It doesn't change, it doesn't grow, it doesn't get better, it doesn't get more efficient. But the currency we value it in, whether that is, you know, people in Venezuela, which would value it in bolivars, so it's been straight up, or Turkish lira, same thing, Argentinian pesos, same thing. Europe, you know, yen, Japanese yen, basically straight up for Bitcoin. You know, a little bit of fluctuation. Dollar, a little more fluctuation. Euro, a little more fluctuation. But depending on what currency you spend in, which fiat regime you are part of, that's how you get the ultimate, you know, value accretion over time. Because Western governments in particular, they have no way out, right? They can't pay back their debt. They don't have enough wealth. So they can't default on it because then they get kicked out of power. They can't restructure it because they all have the same problem, and no one wants to take 60 cents on the dollar and then turn around and try to restructure their debt. So the only way out is the way out that's been the way forever, Stephen, which is devalue your currency. Simple.
Yeah. And I'm sure, Mark, you've been in Bitcoin for quite a while now, and I'm sure things have changed. I remember, I think it was back in 2018, 2019, you and Pomp went on your little roadshow around the US and talked with endowments and many different public organizations.
Oh no, 2018. It seems like 100 years ago, Stephen. I mean, that was a very interesting time. I mean, you know, we're in the middle of a bear market, 2018. You know, everybody remembers 2017, you know, stock or the price went from 1,000 all the way to 10,000 by November. And then we had this, big Thanksgiving where everybody was talking about it. And we had this incredible, I mean, it doubled in about 6 weeks through the middle of December. And then it went into free fall. And part of that was the introduction of futures, which allowed the big boys to get short, naked short, which always is a problem. But, all kinds of different things. And there's still a lot of FUD. Back then, China tried to ban it. Interesting. Putin said recently, who can stop Bitcoin? Well, nobody. I mean, China can't ban it. U.S. can't ban. I mean, you can mess with the on ramps and off ramps, but you can't stop the network unless you can shut down all tens of thousands of nodes simultaneously, or turn off the internet permanently forever. But even then, you and I could trade using pieces of paper or satellite links. So it'd be really tough to stop it. But all that said, 2018 was interesting. We launched our fund in the first quarter of 2018. The price had fallen from 20 to 10, and we went out to try to talk to people. And we would call 100 people. 90 would say, "Don't call us back. You're idiots. We don't want to talk to you." Of the 10 that would actually talk to us, 9 out of 10 said, "No, not interested." But we got about 1% of who we talked to, and we raised a small little venture fund, 40 million bucks, and about 30 investors. So we talked to a lot of people to get that 30 investors. And we put about 15% of that capital into Bitcoin, the rest into companies like Coinbase and eToro and Bitwise and others. And those investments have done really nicely. But our Bitcoin, our average cost was about 5,000 bucks. It's up about 20 times, which is pretty good. But even with that, over the 6 years, now when we call people, still about half the people that we call, Steven, say, don't call us back. We don't believe in this. We don't want to understand it. We don't want to hear about it, which is shocking to me at this point. It'd be like literally in 2001. So in 1996, if you called people and said, "Hey, we want you to look at this thing called the internet." Okay, fine. A bunch of people would have said, "Nah, don't understand it." There's the famous Bill Gates talking to David Letterman, and he's like, I got, the post office, and I got, a memo card. So what do I need the internet for? But by 2001, yeah, the internet was a big deal, and it was here to stay. That's kind of what I feel like now is to say that blockchain technology, that digital assets are going away at this point. I mean, even Peter Schiff this morning doubling down. Gold went up, overnight, and yet it's not really changed over the better part of a decade. And Bitcoin's up, thousands and thousands and thousands of percent. And he still says, "Don't be tricked into buying Bitcoin." I'm like, no, don't be tricked into staying with your underperforming funds, Peter, that literally haven't performed bonds for a decade.
He never gives up, does he? He always keeps doubling down. And I always think it's the sign of intelligence when you're able to change your mind on a specific subject. And he seems very obstinate at this point.
Stephen, that's such an important point. The ability to change your mind when presented with new information is absolutely a superpower, because you're supposed to form high conviction beliefs, right? So we're supposed to, when confronted with new information, be skeptical. Look, I was very skeptical, and it actually cost me a lot of money. In 2013, I was introduced to Bitcoin the same month as the Winklevoss twins. And they're multi-billionaires and I'm not. Why? Well, they were more open to it. I was very, "Hey, I'm a professional investor. This magic internet money doesn't make sense." But more importantly, even though I was skeptical, but people I respected were pushing me into it, I did the work, and it didn't take me that long, only about 6, 9 months to kind of get interested. But when I floated the trial balloon out to clients in early 2014, they're like, we'll fire you. You're an idiot. And I was like, whoa, 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 whoa. Let's not talk about firing. But so it depends kind of where you are. I think the Winklevoss twins, and we're partners with them and back them in Gemini and love them as leaders in the industry. But I think they were in a different spot, right? They had cashed out from their, you know, argument with Zuck, and they had this money burning a hole in their pocket, and they got exposed to it. They didn't have a big traditional business with lots of clients to tell them they were idiots, and so they could do the work. And the thing that I always say that they had that I didn't, they happened to be in Ibiza with Charlie Shrem and a whole bunch of the original OGs. And yeah, you could argue, but those guys were crazy and they were doing this, like, okay, everything that becomes accepted starts out as heresy or heretical or crazy. And Steve Jobs, right? Here's to the crazy ones. That famous ad with Einstein and Mandela and all these. Look, crazy is actually a superpower. The ability to take that crazy idea that challenges your conventional wisdom. And all conventional wisdom means is we all got tired and bored and we just accept the status quo and we lock off all new information, which is a terrible thing. And so history is littered with examples of conventional wisdom that are just wrong, right? The world, the universe doesn't rotate around the world, right? But that was fact for thousands of years. Think about that. And then, you know, a single person, the heretic, almost burned at the stake for it, was brave enough, courageous enough to be a little crazy and take in that new information. So as I have aged, and that's one of the challenges, as you get older, it gets harder to be open to new ideas. That's why most new things are invented by young people. Right? There's a great post this morning. Mark Andreessen was a child. He was 22 years old when he invented the browser. And then Microsoft came in with a bunch of old guys and tried to wreck his business, and he had to reinvent himself, and he's done a pretty good job of that. But Larry and Sergey were in their 20s, and all these people are young because they don't know what they don't know, and they are not set in their way. So for me, as an old guy coming into this, it was harder for me to adjust. But what I've done as a defense mechanism, I now surround myself with young people. So I hang out with young people. It's like that Saturday Night Live skit, with the skateboard. Hello, fellow kids. So anyway.
Yeah, I think that's true, actually. I think the older you get, the more PTSD you have from maybe past investment decisions that went wrong. And maybe you have more responsibilities, you have family, you have more things as you get older. So it's harder to take those risks. Whereas really young people, and they've got the time to make it back up if it all fails.
Oh, that's Stephen. That is such an important point. Michael Steinhardt, famous hedge fund investor, had a great line on that. He's like, make all your mistakes when you're young. Because one, you don't have very much money, so it doesn't really cost you that much. And two, you got lots and lots of time to make up for it. And it was such powerful wisdom because what society kind of teaches us, wrongly, I think, is to be too conservative, right? Like I look at like our structure of retirement accounts in the United States, 401ks and 403bs. They give you more bond options and more guaranteed options. Literally, that should be against the law, right? If you're 25 and you can't touch the money for 45, 50 years, it should be against the law to put it in a guaranteed investment contract. You have to be in equity or real estate or commodities or digital assets because that's where the growth is. So, but they condition you in these, because who creates the products? The old people. And look, if you're, 75, 85, 95, and you got, to spend the money to survive. You know, if you're living on a fixed income, fine. Fixed income bonds, that could make some sense.
They have a fiduciary duty to advise their clients based on their age. I wanted to ask you as well about obviously the Bitcoin ETF. It's been approved for quite a while now. I don't know how you feel, but I feel at the time when it was approved, it was a real kind of crossing the chasm moment where it allowed uh, a lot of people to get into Bitcoin that previously hadn't been able to get in or hadn't been able to have the access. And so it kind of went from early adopters and kind of started to cross that chasm a little bit. Do you feel like that? And what have you noticed on the ground speaking to some of the large institutions?
100%, and it's exactly the right term. You know, crossing the chasm. You know, if you think about bearer assets, they're tough. They're risky, right? You know, we most of us don't walk around with pockets full of cash. One, because you're at risk of, you know, $5 wrench risk and being stolen, or you could lose it, and it's cumbersome. So we found ways to create electronic versions of our physical analog, you know, pieces of paper. And so the same thing is true as now we have these digital assets, these bearer assets, and they don't need a third party, right? If I have money, my physical coins or currency, and I put them in the bank, it becomes the bank's money. This is the dirty little secret. Now it's the bank's money, and I have this IOU, but I'm willing to exchange ownership for convenience, right? So I don't have to lug around the big sacco cash, and I can use my Visa card, and I can charge things, and then I can settle up once a month and take my money back from the bank and pay it to Visa. Fine. That system has worked really well for, you know, better part of 800 years, having these trusted third parties. But now we have this technology that allows us to be our own bank, right? I don't need, you know, in the old days, if I want to send you money, right, you're halfway around the world. So I would have to have a bank account. You would have to have a bank account. I'd have to send it from one to another. They would charge me a fee. So they charge you a fee for your account, me a fee for my account, a fee for the wire. And because it went across international borders, BIS has to take a cut. So really antiquated system, really good for the banks, not so great for me and you, but it's not terrible because it's convenient. Well, now I can send you Bitcoin without anybody in the middle, no middle person, true peer to peer. The problem is I have to take care of my keys. I have to take care of my cold storage. I'm actually even wearing my cold storage socks today with my penguins on it. And you know, I think the challenge of that is people in my age demographic, the boomers, they don't want to do that because they might make a mistake. They might forget their password. They might write down the wrong seed phrase, and then boom, that you know bearer asset disappears. So the boomer wrapper, that is the ETF, is beautiful for those people because they can now own. Now the maxis will, well, they don't own the Bitcoin. Fine, but tell my dad, 87 years old, who owns the ETF, that he doesn't own Bitcoin. He thinks he owns Bitcoin, and you can say, well, no, you know, the ETF owns the Bitcoin, and he just owns an IOU. Sure, no different than the bank IOU that we're all comfortable with. And so, but those Bitcoins actually have to be owned by someone, right? It's not, they're not rehypothecating, they're not creating money out of thin air. It's real Bitcoin in a real account, usually a Coinbase, and that's all good. Now, the downside of it that people, you know, point to is, well, that's not why it was created because they can't really do peer to peer. They still need this trusted third party. Well, look, CeFi, so we have TradFi, the old world. We have DeFi, the new world. CeFi is the bridge. And like anything in life, we're not going to go from 0 to 100 miles an hour right away. We're going to work up to it. And I agree, those ETFs were a great way to get more people talking about it, to get more people interested in it, to have a vehicle that could be custodied the way they're used to custodying it in their E-Trade account or their 401k account. So I think it's wonderful. Now, the downside, there's a downside. The downside is For every new boomer asset, like an ETF or a mutual fund or a trust, you can then create derivatives, futures, options that allow the manipulators, right, the big hedge funds, the big institutions, to take the other side and create paper versions of those assets. And one of the things, Stephen, that I don't think enough people talk about is everybody was like, well, we don't want Bitcoin to be a security. Okay, we'll call it a commodity. Oh, yay, that's a win. I'm like, whoa, whoa, be careful what you ask for. You might get it. Think about what a commodity is, and think about the markets that commodities sit in, and think about who really controls those markets. Oil's a commodity, gold's a commodity, wheat, corn, commodities. Well, what happens in those markets? The futures markets become larger and larger. And in the old days, if I wanted to sell you oil, I actually had to have ownership of oil. So I would have to get the oil, deliver it to you on a tanker car, and you would put it in storage somewhere. Not anymore. I can just write you a derivative contract and say, yeah, I'll sell you some oil. I don't have to have any oil. I just make paper oil. Well, if I make new oil out of thin air, that sounds kind of like fiat, doesn't it? Well, yeah, it kind of is like fiat. You're by decree making more of something. And so the price can be manipulated, because if I can sell you oil, well, I could sell Bitcoin, but I don't have any Bitcoin. Well, I can just sell it. I can just create a future. So what's happening in the market, if you look, we had the big move right when the ETF got approved. And then right after, it started to go down. And for 6 months, it just kind of trended in this yuck pattern of lower lows and lower highs, a very distributive pattern. Because what was happening is these big hedge funds and big institutions were buying the Bitcoin ETF, but they were selling the future. Like everybody said, oh, look, Millennium owns 2 billion of the ETF. I'm like, guys, they're a market neutral fund. They're short at least 2 billion. They might even be short more than 2 billion of futures against those long positions. So those shorts are pushing the price down. And I'm sure you've looked at the gold market. The gold market for years has been stuck in this trading zone because JP Morgan and other people, they buy the ETF or they buy gold physically and they short the future against it, because the future price and the spot price are different. So they can, what's called roll yield, you can roll down the futures curve and capture a small amount of return. But if you do that every month and you annualize it and you lever it, you can make 30, 40, 50% doing that if you're a big institution with the right capital. So it's a be careful what you ask for, you might get it issue. And financialization does have its dark side. It's certainly good for increasing awareness and ownership, but it can be bad for short-term price trends.
Yeah, we did have that period where things did chop up and down, and I think that was because of the options market. And obviously, it broke out of that on news of Donald Trump winning the election and that strategic Bitcoin reserve. I think a lot of people who had short positions or options positions had to change their positions when that happened. I wanted to ask you actually about the strategic Bitcoin reserve that's being proposed at the moment. How much of a game changer do you think that is if that gets proposed? Do you think it's got a high likelihood of going through or a smaller likelihood going through? And how do you think it will change the way that the market dynamics play out?
I think it's got a pretty high likelihood of getting, it's got endorsement by Republicans, and Republicans control all three, sides, the House, the Senate, and the White House. So I think it's got a pretty high likelihood. All of the appointees on the finance side, from the Secretary of the Treasury to the head of the SEC to the new, AI and blockchains are all pro Bitcoin. So I think it actually has a reasonably high likelihood of passing. There'll be a little opposition, but Ms. Warren doesn't have any power anymore. So I think it'll pass. Now, is it a game changer? Well, it's certainly, if you just do math and you say, okay, they picked a million, why a million? It's a nice round number, I guess, but they picked a million over 5 years. So that's 200,000 coins per year. That is, a meaningful number, about 1% of the outstanding supply per year. So that's a meaningful number. It's not like a corner of the market number. But part of the challenge is so many of the coins are owned by people who just have no interest in selling, right? I mean, like now, I have this interesting situation where I'm a venture capitalist and I own Bitcoin in my funds, and my funds will eventually come to end of life and I have to return the capital. But I will do everything I can personally to keep those Bitcoins. So if I have to take my compensation in Bitcoin, I will. And I'll just not sell the Bitcoin and I'll just return other things in cash. I think because it's done so well for us in the funds, we'll actually probably have to sell some. But what I may do is sell them out of fund one and buy them into fund four. I mean, I have to go back to, I can't do it directly, but in a market transaction. So my net is my clients will still own the same amount. But that is one source of liquidity, is people who bought it into partnerships that have a finite life. So I do think it's a real tailwind, but I don't like the price of Bitcoin isn't going to $1 million next year because the government buys 200,000 coins. I mean, Michael Saylor bought 21,000 coins over the weekend, and the price actually went down a little bit. So that's because they're spoofing the price in the futures market. So 200K, like if they said we're going to buy 5 million Bitcoin, okay, now we got a different problem. That's 25% of the supply. Well, actually, probably more than that, because there's 21 million total, but there's really probably closer to 18 million when you take out the lost or stolen or kind of permanently abandoned. So a million is a real number, 6% ish of outstanding supply, but it's not enough to get to the numbers that some people talk about. Michael Saylor says, oh, the price is going to 13 million. Well, over 30, 40, 50 years, yeah, maybe. But, and look, if the, and he's talking about in dollars, if the dollar, the US dollar goes Weimar, right, like the Deutsche Mark did, which is not out of the realm of possibility if we don't get spending under control, then all bets are off. But in a Weimar scenario and Bitcoin's at 13 million, everything else in your life is causing you to choke, right? Your food cost, your gasoline cost, I mean, everything is crazy. So my guess,
Yeah, that's not something we should be wishing for, right?
oh God, no. Yeah. We do not want, we don't want financial collapse, right? I always marvel when people bring on the end of days scenario. I'm like, no, I kind of like not having to sit on my front porch with a gun and protect my stuff. I don't want to go back there.
Me too, definitely. Me too. Do you think it could cause, obviously, if the US do propose it as a strategic reserve, do you think it could set off some sort of game theory race with other nations? Because I know, for example, the Middle East are obviously dipping their toes in at the moment, and they may or may not have already bought Bitcoin. But do you think it will set off a global race?
100%. 100%. Look, gold is money, right? And what do I mean by that? Gold is an asset that exists in the absence of a liability. Everything else that we talk about as money is not money, it's currency. Currency, which can be created by fiat, will eventually devalue. And look, there have been 775 paper currencies in the history of the world. 3/4 of them no longer exist. I just watched the tail end of Gladiator because I'm kind of trying to prep for watching Gladiator 2. And, at the time of Gladiator, the Roman solidus was the most powerful currency in the world. if you had a solidus, you were solid, right? You were a citizen. That's where the word solid comes from. We don't use soliduses anymore, right? They were the most powerful currency in the world, and now they're a trinket, right? You can buy them for a couple dollars on the street because they're not worth anything. And so currencies come and go, but gold for 5,000 years, which is a long time, a single ounce buys a fine person's suit, from Cleopatra's time to a suit of armor to a zoot suit in the 20s to Savile Row today. You give them an ounce of gold, you get a fine person's suit. It's pretty cool. Now, that is the base layer of money. Every central bank in the world has at their core some gold and some other assets, but mostly gold bars and gold bricks. And then they print currency on top of that. And some are more tied to a gold standard and others aren't, but they all own gold, right? Every central bank owns it. Well, if Bitcoin is everything that gold is, equally scarce, but more portable and more durable, more divisible. I would say if I had a bar of gold here, which I don't, I might have one at home, but if I had one and I wanted to break it in half, I think I'm a fit guy, but I couldn't do that. Even if I couldn't stuff the half into my computer and send it to you, right? Because it's not portable, it's not divisible. So Bitcoin, I can punch a few buttons on my phone and it's in your wallet like that. So Bitcoin, I do think, replaces gold as the base layer of money. Now, gold will be used for other things. Gold is still that thing you want to have a few Krugerrands in your pocket for the Mad Max scenario, because you can barter that. Whereas if you can't get to the internet, it's tough to spend your Bitcoin. So I do think physical assets have a role, but Bitcoin becomes the base layer, and therefore every government is going to have to own it. And that is going to trigger this game theory. Now, what will that? Everyone says, well, then the price will go crazy. No, because once all the Bitcoins are owned by central banks and not by individuals, and I don't think that'll ever happen, all of them, but once that base layer is owned by those central banks, the volatility of the asset will basically shrink to zero, right? And we've all seen the curve, right? The Bitcoin price curve is a parabola. It's not a straight line or a parabolic curve up. It's a parabola that gets decreasingly volatile and decreasing. It's just the law of large numbers. 100,000 to a million, while that sounds really big, it's only a 10x. We've gone up 1,000x in the past 10 years. We're not going up 1,000x from here. It's the law of large numbers.
It's much harder to move a very large market cap than it is to move a smaller market cap. So that does make total sense.
Yeah, just do the math on global GDP, right? It's not, we're not going to have any asset that's multiples of global GDP. It just doesn't make sense, right?
Mark, what do you think is the total addressable market? I'm not talking in the short term or whatever, but obviously I think Bitcoin will take a lot of the market share of gold. Potentially, I'm thinking it also takes, people who are in bonds who might not invest in bonds, etc. What do you think is the total addressable market over the years, and what do you think it will take away from?
It's such a great question, right? Such a great question. So if you think about it, Bitcoin gold equivalents, total no-brainer, right? Bitcoin is going to replace that monetary value of gold. Now, you're never going to use Bitcoin to make chalices or jewelry or whatever. So that $6 trillion of gold that is in stuff, that's not Bitcoin. But Bitcoin is the monetary value. So that 6 trillion number, that's money in the bank. 300,000 price, that's so easy. Is it tomorrow? No. Is it 2 years from now, 5 years from now? I don't really know, but that's easy, super simple. Then we get to how much of the delta between the 6 trillion of base layer money and the 100 trillion of total monetary value does it displace? Now, Murray Stahl at Horizon Kinetics would say all of it, right? It's reverse Gresham's law. Good money will eventually crowd out bad. Gresham's law says the opposite, that bad money like Zimbabwe or Venezuela, crowds out good, and you get the hyper inflation. He says ultimately good money this time will crowd out bad because it's better technology. I agree with that. So over the long term, 100 trillion, yeah. But I'm talking a long, because the governments are going to fight it, and people actually are going to fight it because old people aren't going to want to change. I joke, my dad doesn't have an ATM card. Like, what do you mean you don't have an ATM card? He's like, I like to go into the bank. I'm like, why would you go into the bank? Ever. I would never go into the bank. I mean, I don't even understand why we have bank branches anymore anyway. Why? So, so there's going to be this generational change, but think about the $39 trillion that my generation owns, the boomers. When we pass, and we're all going to pass, right? And all of us, it's all going to get left to our kids, the echo boomers. That 39 trillion isn't going to stay in stocks and bonds, to your point, Stephen. It's going to transition a big chunk of it into digital assets. So that would take us, if we're at a couple trillion today, and pretty soon we're at 6 trillion, and then we add another 40 trillion, so we're about halfway there to Murray's 100 trillion.
Yeah, it could also take away some of the real estate market as well, because a lot of people have investment properties, second, third investment properties, and a lot of people are seeing Bitcoin like digital property. So it would make sense that a lot of them transition. The younger.
Well, and to that point, if it becomes the asset, right? 700 trillion of assets around the world, real estate, stocks, bonds, private businesses. Now, I don't think it replaces all of it, but here's an interesting thing. The American dream when I was growing up was you bought a house. You moved into the house, white picket fence, 2 kids and a dog. Okay. Today, that isn't so much the dream. I mean, one, you can't, most young families can't afford a house because the price got so high relative to income through this theft, inflation. So that's the first challenge. Well, if they're just going to rent forever, they need something to. And why was buying a house the American dream? Well, that was the way they engineered it post World War II with Bretton Woods to get you to create money to live on in your old age, because Social Security wasn't going to do it, because the way they set it up was a pay-as-you-go system that will go bankrupt. So they're like, well, we got to engineer a way for people to accrete value. Well, lever an asset and then quietly devalue the currency and inflate that asset, and voila, you've created equity for a whole generation of people. Well, if people today can't buy that asset that will be devalued, they can buy Bitcoin, and they can buy it in as small as 1 Satoshi, 1/100 millionth of a Bitcoin. You don't have to buy a whole Bitcoin. And then you do the same thing. You just keep devaluing the currency. Well, ceteris paribus, if you do nothing to that Bitcoin, or you do nothing to that 100 Satoshis, and the currency just keeps devaluing, the value of your asset goes up. And so I do think you've got a whole generation of Zoomers and Gen A's that I say this all the time. I have 3 grandkids, 2, 4, and 6. My youngest will never have one of these, right? She'll never have a leather wallet. She will never know what paper currency is, ever, right? She probably won't even ever touch a $20 bill, because they'll have digital. And that digital is the future. And I think you're right that it will displace much of the way people save. And the beautiful thing about that, historically, you saved in cash, right? You bought savings bonds, or you bought, savings account, and the government could steal back from you through this inflation. Maybe you saved in real estate, and that was kind of the plan. Well, now you can save in this asset that they can't control. And the things that they're prone to do, which is devaluing the currency, makes your savings asset more valuable, not less. So if you have a savings account and there's inflation, your savings account goes down. If you have Bitcoin and they devalue, your Bitcoin goes up. So this is a dilemma for governments that I don't know how they're going to solve, other than trying to mandate, you know, ways around it. Like, oh, well, buy our CBDC instead of Bitcoin. Hell to the no. No. Stay in your Bitcoin and eschew anything government related. But, we'll see how that plays out.
Yeah, definitely be interesting. And I want to talk about corporate treasuries now, in terms of companies putting Bitcoin on the balance sheet. And from what I understand, there's two different scenarios. You've got the treasury companies like MicroStrategy and MetaPlanet, which I know you're involved in.
MetaPlanet, yeah, I'm a board member of MetaPlanet. Love that.
I would like to hear a bit more about that as well. And then obviously on the other case, you've got businesses with a core business like Microsoft and some of those Magnificent Seven, who may want to put Bitcoin on balance sheet to supercharge their balance sheet, right? Can you just explain the difference between the two, and also just give me a little bit of a summary about what MetaPlanet are doing as well as a board member?
Yeah. So look, MicroStrategy was the pioneer here, and Michael Saylor came to the conclusion, 4+ years ago, almost 5 years ago, that his core business, it wasn't doing so great. And he had all this cash, and every day he held the cash, it was getting less valuable through inflation. So I was like, well, what if I swap the cash for this Bitcoin thing? And then as they devalue the currency, the value of my asset will rise. And it worked. And then he realized, well, people will actually lend me money to buy more, because by rule, right, there are all these people who can only own bonds. They can't own stocks, they can't own Bitcoin, but they could own my convertible bonds and then get access because they're basically backed by the Bitcoin. And so he converted his operating business, which is a tiny fraction today, to basically he's a Bitcoin bank. And that Bitcoin bank works like a flywheel in that he can issue new equity, okay, and buy more Bitcoin than the amount of Bitcoin that backs the equity, or issue debt with no interest, which is crazy because there's so much demand, and buy more Bitcoin, and then ultimately convert it back into equity in the future. So all of this is a flywheel effect that increases the value. So MetaPlanet, Simon, looked at that and said, hey, I have a real estate business that it's not doing that great. What if we did the same thing? What if we said that business not going to be interesting? We're public. We'll use the public shell to raise capital and convert it to Bitcoin. And it's worked great. The stock has done great. Business is doing great. I mean, the business being a Bitcoin treasury. But there's another added advantage. In Japan, if you hold Bitcoin directly and you make a gain, the tax is super high. If you hold MetaPlanet and you have a gain, the tax is much, much lower. So there's a tax arbitrage in addition to the benefits of owning Bitcoin. So Bitcoin treasuries, businesses have said, my core business, not really that great, so I'm going to become a Bitcoin bank. That's one class. Then there are these other companies that you rightly described. They're like, well, what if I just took my cash that's just burning a hole in my pocket and getting less valuable every day, and I convert that to Bitcoin? There's been a few that have dabbled with that, and everyone, their stock price goes up and after the announcement. Now it's dribbled back off in some cases because they don't really follow through. But generally speaking, if I have $100 million of cash, every day it's getting less valuable because of inflation. If I have $100 million of Bitcoin, in theory, every day it's getting a little more valuable because of that devaluation. So that number of businesses is still small because there's still the reticence, the board's like, well, but we're fiduciaries, and is this really a fiduciary asset? I will argue we're not that far from the day, and I've been talking about this for 5 years. I said there will come a day when you will be deemed fiduciarily derelict of duty if you don't own digital assets. I think that day is pretty close. And so I think Amazon was talking about it this morning, and Microsoft may have a vote tomorrow, and so Apple, look, these are big treasuries. I mean, big, like hundreds of billions of dollars. And talk about game theory. If if you're one of the Mag 7 and you don't do what the other Mag 7 do, will more money flow away from you and to those others? Probably. So that could be a very interesting short-term demand squeeze.
Yeah, in a way, actually, that's probably more likely than the game theory on the nations, because it obviously takes a lot. It takes a lot more difficulty and organization, etc., to be able to get countries in line to be able to do that. But you can have board meetings and board proposals, and that could go through quicker. And as you said, they all benchmark against each other.
Go pretty quickly. You're right. It's a very interesting dynamic, and I think it a lot will depend on whether people toe dip or whether they put in their whole leg. And if they toe dip, it'll probably be a novelty. If somebody takes the cold plunge and goes kind of all in, it could get big fast, like super fast.
Do you think there will be Bitcoin treasury companies in a lot of countries? So, do you think there'll be a lot of room for each country? So, we've obviously got Japan now, we've got MicroStrategy in the US. Do you think we could see Korea, Singapore, and other countries adopt this?
Great question. Absolutely, there should be, because every country has different rules and regulations, and heck, somebody in France should do this tomorrow, because I just saw they're trying to pass a law to make unrealized gains on Bitcoin taxable. So, France is just horrible. I mean, it's totally WEF controlled, and they're doing all kinds of nasty stuff, like arresting programmers for making software, and I mean, crazy stuff. So actually, I might have to go do that. I might have to go find a shell company in France and go do that. So if anyone has a shell company in France, call me.
That's the way to do it. Yeah. If anyone has one in Korea, let me know too.
Yeah, yeah, absolutely, absolutely. Korea absolutely should have one. Korea absolutely should have one, for sure.
It's so innovative in Korea, and they've got lots of crypto companies around. So that does make total sense. In terms of investment, so if we look at Bitcoin, obviously it's been a really great investment over the years, but especially this year, it's been excellent. How do you think about picks and shovels investment? So if we look at mining, we look at some of the crypto exchanges that are listed. Do you think that the good investments would potentially higher betas than Bitcoin, the asset? Do you think it could be a good investment?
100%. And look, picks and shovels are always good investments. Exchanges in particular, you look around the world, all the exchanges have been, I mean, traditional exchanges have been fantastic investments. Ibovespa, London Stock Exchange, NASDAQ, all been great investments because they're just toll takers, right? As long as there's activity, they're making money. And Coinbase is a great example. Coinbase is up, I don't know, 143% this year, something like that. I mean, it's a great investment. We made close to 10 times our money on that from our original investment to the IPO. So it's a great business model. So we've invested in exchanges in Latin America, we've invested in exchanges in Hong Kong, we've invested in exchanges in Europe. So we like the exchange model. Other picks and shovels businesses, miners need machines. So chips, that are the picks and shovels of mining. We made some investments there, and mining is going to be with us, for at least 140 years. After that, maybe it's all transaction fees, but even those need to be, the miners need still to secure the network and charge the transaction fees. So I think it probably goes on to be even longer. So mining's another one. Software and tools for the layer twos and the layer threes. One of the things that people don't really think about is, gold is money, right? It's the base layer of money, but none of us use it like money. We don't carry Krugerrands around our pocket. We don't send gold to the Visa company. We use the L4, right? The Bitcoin Visa network up here, L4. It settles once a month to the L3 ACH, which then settles down to L2 Fedwire, which then eventually settles down to gold. But we don't settle to gold. The big banks do. So people are going to invent the L3s and L4s of the Bitcoin blockchain. And you've seen a little bit of that with ordinals and inscriptions and runes and beyond meme coins. There's a lot of opportunity in creating the transaction layers for the future and allow when Bitcoin is a zero vol asset as opposed to an 80 vol asset, and it is used for daily purchases, and you carry a wallet around with your hot amount. Like in my wallet, I don't carry a lot of cash, right? But I carry a transaction card. I'll do the same thing with Bitcoin in the future, and my savings won't be in fiat; it'll be in Bitcoin, and I may you know carve off a little bit of the yield that I earn to spend. So I do think payment rails, stable coins, so many investment opportunities in the digital asset ecosystem. We invest in what we call the ABCDs: AI, blockchain, chips, and data. Look, there's a world coming where we all have, AI agents that do our work for us. Like I'm my son and I are going to go to a football game, for the whole playoff here in the U.S. And I should just be able to say, "Hey Siri, go book my travel for December 20th," and the agent should do that, and it should use a wallet to make the payment. I shouldn't have to sit on the computer and and then pay the Visa card. So ultimately those agentic AIs will use blockchain, and that's that intersection of AI and blockchain that will become a really really big business.
And the payment as well. I mean, when you're having those systems in place, they should all be really incorporated into the system and into the AI, so you can make payments seamlessly, whether you're in the car or whatever you're doing. It should just be. It's a bit like the television. You don't really care how it works and how the wires work behind the television. You just care that it displays a picture, right? And that's what you really want.
Oh no, I mean, like right now, you and I are talking seated halfway around the world. We're talking in real time in HD. I would say I wish it was a little fuzzier so you couldn't see all my red spots. But it's amazing. And I don't understand how that's possible, but I don't need to understand. I just take advantage of it. So the same thing is true exactly as you said. In the future, right? You'll be in the back of your car. You won't drive a car. You'll get driven, and the car will take you, and it'll need to charge, and it'll pull into the charging station and do a fast charge in 2 minutes. It won't take you 45 minutes, but you won't get out of the car. Put your plastic card in the machine. The car will pay the machine, and then it'll pull away. You'll get into traffic, and you say, "I don't want to sit in traffic. I want to get in the fast lane." It won't take a picture of your license plate and send you a bill. The car will pay the lane. So all of those microtransactions will occur in crypto, and they'll all be facilitated by blockchain rails, and all going to be very profitable.
Okay, and I think we're both agreed on the destination of where we're going to be with Bitcoin. I think over the long term, we're both very bullish that over the long term it will go up. But if we look at the journey, obviously we don't know what's going to happen. But do you think that the 4 year cycle price booms and price busts will continue because of the design of Bitcoin and the halvings? Or do you think that with the adoption of more corporate companies, nations, etc., do you think that it might it might smooth out so we have less big booms and less busts? Or
Again, great question. Depends, right? So there's no question that more demand tailwinds lessen the probability of deep drawdown, right? So that's clear, and that's why each drawdown that we've had has been a little bit less, because we had more demand being created. The thing that's unknowable is how much of the bad stuff will come back this cycle. So, and what I mean by that is the fair value of a network is determinable, right? We can use a Metcalfe's law model and we can determine the value of a network, and Bitcoin is a network. And so we can determine the fair value. Well, when the price gets way, way above fair value, that's why you have downturns. Well, what causes the price to get way above fair value? Human beings. Humans are going to human. So humans buy and then they get confident. So they buy with leverage. Then they get overconfident and they buy with too much leverage. And then we have a downturn. And so if the only thing that happens in this cycle is governments and corporations buy and the individuals stay sane and don't lever up and we stay close to fair value, then we won't have a downturn. That ain't going to happen. Humans are going to human. Humans are going to come in. They're going to go with leverage. They're going to borrow. They're going to, and depending on how high we get, my estimate is we'll get to about 1.5 times fair value this cycle. And so the downturn won't be 84 or 74. It'll probably be more like 44. But that's still a cycle. And then when the halving occurs, we'll absolutely have another upcycle because the way the math works, right? If all the miners are getting compensated and they get a certain number of block rewards, 450 a day, and we cut that to 225 a day, either half the miners go out of business or the price rises. It's mad genius in how it was built in because prices rising attracts attention. Attention attracts investment. Investment attracts further price rise. So it's a self-fulfilling model. And so more nodes, more participants, more wallets, more fundamentals, higher fair value, higher price. Humans are going to human, so we're going to have cyclicality. Will it be muted this time because there's more demand and it's not the crazy kind? Probably. But I'm not going to say that we're not. Look, if people think that we'll never have another downturn, I wish them luck, right? Every market has downturns because humans are going to human.
Yeah. I tend to be of that thought process as well, that we'll probably see the theory of diminishing returns just because of the size of the asset. And that will mean that the downside will be less and the upside will be less. But I mean, if we compare it to other assets, it's still an absolutely great upside, right? We cannot complain at all.
Absolutely. Absolutely. This is
Okay, Mark, can I just ask you very quickly how people can reach out to you, how people can find out about you if they've been living under a rock and they're not on Twitter?
well, I'm all over the internet. So if you just and there are not a lot of Yuskos out there. So if you type in Mark Yusko, it'll send you some stuff. So I do a lot of podcasts. We have a podcast every week called Digital Currents that you can find on Spotify and YouTube and Apple Podcasts. I'm at Mark Yusko, MarkYusko on Twitter, and I'm there all the time, so I'm easy to find there. Morgan Creek, morgancreekcap.com is our website, and I said there are other places out there where you can find me. I'm easy to find, and I occasionally respond to DMs on Twitter. I'm pretty bad at email, but most people find a way to find me. The easiest way is to get to my assistant Leslie, and she'll make the logistics happen.
Okay. Thank you. I've had a really great discussion today. I've got through a lot of content and it's been an absolute pleasure to speak to you, Mark. I hope to have you again on sometime in the future to talk about further updates.
Nah, thanks, Steven. Appreciate it. Enjoy the holidays with the family and safe travels, and we'll see you in the new year.
You too, Mark. Thank you.